And it's Elizabeth Stephenson with New Direction Family Law, and we're here today with Ashley Rutledge of Rutledge CPA, and we want to talk a little bit about some of the upcoming changes in the tax code that are going to affect folks going through separation and divorce, and then other questions that you might have and we can address about dividing property and tax consequences and that sort of thing. So welcome, Ashley. Thank you for coming today.
Thank you for having me.
Tell us a little bit about yourself and your firm and that sort of thing.
Well, I own Rutledge CPA. I'm currently based in Wake Forest.
Okay.
So stone's throw from here.
Absolutely.
Right. And I've been in business for myself for a little over a year now.
Okay.
So I'm getting ready to gear up for another
The
crazy tax season. Yay. So right now we're really concentrating on tax planning.
Right.
I have about 12 years of experience in accounting.
Okay.
Ranging from corporate to public, and I've been a CPA for 3 years.
Okay,
so.
great. So can I dive right in with some questions?
That'd be great.
Okay. The biggest one, I think, and we're all rushing for the end of the year, it depends on if you're a supporting spouse in an alimony claim or you're a dependent spouse. So right now, what are the tax rules regarding someone who's paying alimony?
So someone who's paying alimony right now, and the cutoff and the differentiator is, was your divorce executed before December 31st of this year?
Okay.
So that's the cutoff.
Okay.
If you are the supporter, you get to deduct the alimony above the line on your taxes, which means it decreases your adjusted gross income.
Right. So what I tell folks a lot of times is, oh, you might have to pay $1,000 a month in alimony, but at the end of the year, you get sort of a payback for that. So you're not technically paying $12,000,
Mm-hmm.
right?
Yeah, you don't pay tax on that money.
Right. Okay. And so if I'm the one receiving the alimony, I'm getting taxed just like it was income. Correct.
Mm-hmm. And it almost feels like income that no taxes were taken from.
Right.
So it's kind of a hit for a lot of people, especially their first year.
Right. At the end of the year when they get their taxes.
When they don't realize it,
right.
Because now they have to pay taxes on that whole amount.
Right. So what's going to be the change starting on January 1st, 2019?
January 1st, 2019 completely kind of squashes all that, right? It all changes completely. So no longer do you get to deduct that amount as the supporter. So that money that you're paying in alimony is still taxable when it wasn't before then.
Right.
And now the receiver, the one who's dependent, does not have to claim that as income either.
Right.
So depending on which side of the line you're on, you either think this is great or maybe
not so good.
Mm-hmm.
Yeah. And it seems a little unfair that you're getting taxed on income that you're not having any ability to use, really.
Yeah. It seems like it's not fair for one side.
Right.
And when I read that, I thought, is that right? Okay, yes,
yeah,
that's right.
Yeah.
That's right. But the net effect to the IRS and state governments is
a bonus.
It's a wash for them, and it's meant to simplify the tax code. That's what. Yeah.
That's not our lives, but the tax code.
Yeah.
Okay. Other things that people ask me about is custody. If you are the child lives with you primarily, which means more than half the year, you automatically get that child dependency exemption, correct?
Mm-hmm. Well, and that's another change. So exemptions went away.
Okay.
So it's a big, what's the benefit of claiming dependence now? It's no longer personal exemptions. Those are gone on the tax room. I know, it's like, where did this come from? I know, ouch. And that really hurts, especially big families.
Right.
A husband and wife, they got to claim themselves, but if you have 4 kids, you can imagine that's $4,050 of an exemption that's gone for each person.
Wow.
So that's a big impact.
Okay.
And so I preach that all the time.
Good.
Like, exemptions are gone. And what does that mean? So really what it boils down to is the child tax credit.
Okay.
So in taking those exemptions away, they've increased the child tax credit, but not a 1-for-1.
Okay.
You don't have 2 children and get
double
$8,000 of child tax. They increased it from what it used to be.
Okay.
But you're not going to see
still
a
not
wash.
going to see a wash.
Mm-hmm.
Okay.
No.
So is that something worth? Is it worth fighting over anymore? I guess is the question.
It's still credit. So
okay.
So your tax that you're getting charged on your tax return.
Right.
It reduces that tax.
Okay.
So credits are kind of, the gold nugget of tax.
Right.
They reduce the tax, not just taxable income.
Okay.
So they're still worth fighting for.
Okay.
But it's not as heavy weighted maybe as exemptions.
Okay. And a lot of times what we do is we sort of split the baby, so to speak,
Mm-hmm.
and say you get to take in odd years and I'll take it in even years.
And that's what I see more often than not. So they'll have to say, Ashley, which ones did I claim? Or they split them, two children. They're like, which ones did I claim last year? So I have to go back. And
look,
And I do want to circle back. If you do modify your divorce, redo it, modify it, it changes it for you. So if you executed it before December 31st, 2018, and then modify it next year, then you're subject to the new rules.
Change, right?
So,
and when Ashley says divorce, we're not really talking about getting divorced. It's more if you have a court order for alimony that may be modified in 2019, then the new tax rules will apply to you.
Yes.
Correct? Okay.
Yes. I don't speak. Yeah.
No, I know.
I'm glad.
I'm glad you like my sometimes. Let's talk about another big issue is how to split those assets. A lot of times one spouse may work and have the retirement, but in North Carolina it's still a marital asset. So the spouse that didn't earn the retirement is still entitled to their marital portion, which is whatever half was earned during the marriage. So if I get that and I take that out, it's rolled into an account for me, and I need it now, is there a penalty to me to getting that money out of that retirement account?
It really depends on what type of retirement.
Okay.
Let's
say it's a 401k.
Yeah, 401k,
Okay.
which is a pre-tax.
Right.
Even though it wasn't yours originally, it's still considered pre-tax money.
Right.
So you still are subject to a 10% penalty plus
the
tax
on the
top
money
of
that you've taken out.
So what that lovely retirement company does is they send you a 1099-R, and that's where you report that income.
Okay.
And there's a special little box that says it's taxable.
Okay.
So then the IRS knows that you get the penalty plus
Plus
tax.
the tax. And a lot of times what you'll see in separation agreements, and if property is divided pursuant to a divorce, then there's supposedly no tax consequence. If I give you a distributive award of $500,000, you're not taxed on that money because it's a distributive award. Retirement is different in some cases, that you may be taxed if you actually take that out and use the cash, correct?
Yeah, it's really all dependent on how it goes to you. If you're just getting a distribution,
right,
and it's looked at from the the retirement company that it was the supporters,
right, that they took it out to pay
to give to you,
right.
then it falls on them for the taxable.
Right.
Yeah.
And then another issue about that is, let's say that you have a house and there's $300,000 worth of equity in it, and nobody wants it, so you're going to sell it. There's going to be some tax consequences regarding that, correct? Okay.
And really, it'll follow, the arrangements of how this is divvied up. Regardless, there'll be most likely, especially right now, a capital gain, and that is calculated on your tax return. So it's really important before you go to sell that you understand what that could be. And maybe you need to make estimated tax payments ahead of time, or you just know that a big tax bill, bigger than what you're expecting. Is
and
coming.
Can you explain what capital gains, what that is?
Well, that is sure. So if you bought your home for $100,000, and then you turned around 23 years later and you sold it for $300,000, you have a $200,000 gain, and you're going to be taxed on that gain. At $200,000. Right. So you can see how. I mean, it's great if you're appreciating and you get more out of your house, but the government says you got to pay some taxes.
Right. So you need to consider that when you say, I don't want the house. You can have it. You may say there's $300,000 worth of equity, but it's not really that much. So you need to offset that with another asset in some way. Right. Okay.
Yes.
Right. How about if you're separated? Do you have to file marriage? How do you do that?
This is a fun question. Yeah.
I don't want to file with him. I don't trust him.
And I see this a lot with clients because most of the time it's contentious. They don't really want to talk.
Right.
But in North Carolina, you have that year of separation.
Right.
So the rule for tax return filing and what status you choose is whatever your status is at the end of the year, so December 31st.
Right.
So if you're separated but not divorced, you have two options. You can do married filing separate or married filing joint.
Okay.
And what I encourage my clients to do is do it married filing jointly, but check and see if married filing separately is more beneficial.
Right.
But in doing that, we still have to collect both spouses' income and everything. And I know it's difficult to talk and work together, and I do it different ways. Sometimes they handle it, talking and doing the documents, or I'll talk to both. Okay. So It's really what's easiest. I'm pretty,
Right.
most taxpayers are flexible and understand that this is not a great situation, but we need to get the tax return filed.
Right, and we need to get it done.
Mm-hmm.
So, we can't represent two parties. Can a CPA still be a part of, if they're separated, can they, no, you don't represent them, but can you, work on their behalf, or do you have to say, I can only do one of you, or it might be best to go somewhere else?
We've had this in other firms I've worked at, that they were together, they were divorced.
Right.
More often than not, you can. There's no rule against working for both, because as a CPA, we have the fiduciary responsibility to do what's best for both. So we can do that, and there doesn't need to be any independence on both sides. But naturally, some clients may say, well, I really don't know that you'll be fair. There's still that, are you going to be fair to me? In my world, it's the same. We're getting hard facts and numbers down. Right. But I'm willing to work with another CPA if one of the clients wants to split and do it separately. But you'd have to do a married filing separately that way. And one other, so the next year, let's say you do get divorced and it's finalized before the end of the year, you can file single then.
Right.
For the whole year.
You don't have to deal with that.
Yeah, so that's the flip side of it. Once you are divorced, as long as you're divorced by the end of the year, you can file single.
Okay. What else do folks coming to you that are maybe going through a separation and divorce, what else are they concerned about in the financial realm of that world?
That you've actually brought up most of them. So the capital gains, the retirement, because I have a lot of clients that they're still going through that separation and dividing of assets. So they say, well, if I take this,
can you help them? Can I send someone to you and say, here are the assets, and what's the best way that we should divide them that is beneficial for my client? Can you look at that and make suggestions on that?
So that's what I do a lot of that, especially right now with tax reform. So tax planning's really big, especially in quarter 3 and quarter 4. But that's a perfect example of when we could do that. We can go ahead and load in all of the numbers we do know. Right. Estimate what we don't, and then we could say, okay, here's the assets, here's what we anticipate, and we can show that's bad for you or that's good for you.
That's good. Okay, so it's not necessarily... It's not best sometimes to split everything down the middle, especially if you have an IRA here or 401k here and this. Let's figure out what the total is, and then we can sort of take it from this pot and not that one, perhaps.
Yeah, and looking at tax is a very holistic picture.
Right.
So it may sound good over here on its all by itself in a silo, but when we stick it with your whole tax return, it changes the whole picture.
Got it. So tell us a little bit about how people can get in touch with you, and we talked a little bit about the services you can offer, but if you're going through a separation and divorce, you're really you're stressed, your mind may not be thinking right, so it's really important to have a professional to help you. So what can you, if I come into your office, how can you help me?
Oh, sure. Well, we generally, how we start is we'll look at your prior year tax return. And we'll talk about what changes you're anticipating. And so if it's early enough, like right now, we can kind of make some changes and do some strategy. And then, so it's actually a great timing. A couple weeks ago, I actually was talking with a client who's getting ready to be divorced, but it probably won't be official till next year. And so we were talking about the pensions and the retirement. So, we can see a lot from the prior year tax return, but then we generally extract a lot more information to make some good decisions. So, and for my firm, what's really important is education. If I can educate you and I can, we know things ahead of time, we can make better decisions.
What do they need what are the important things in papers and documents that they need to make copies of or have? Tax return.
Tax return's a big one. Any W-2s or pay stubs are fantastic. Any retirement statements that they may have. And that can include any like financial investments, brokerage statements. Even if it's not a year end, it'll have a year to date on it. So we can kind of
give you some idea.
Give a good estimate. Anything that you can think of you would put on a tax return or potentially could land on your tax return with the divorce is great information. You can never have too much. And I do a lot of digital too. So if you don't want to bring all that. I have client portals, so there's secure client portals that can be uploaded into.
And are there ways to get things that you might not have access to sometimes? I mean, you can get tax transcripts and that sort of thing, but getting bank records or retirement accounts, do you come up against
Generally, that's when we are a good team with the legal team or financial advisor
to try to get that information.
Yeah, so that's the best way, because other than having a power of attorney, which may or may not be willing to get, there's not a good way for us to get it. So having a good, we call it a good power team together. So, like I said, lawyer, financial advisor, accountant, and
all working together to help figure this out.
Yeah, we can get everything we need.
So how can folks get in touch with you if they wanted to call you, make an appointment, and that sort of thing?
Well, all that information is on my website, so that's the best way to do it, but I'll give you the other ones as well. So Rutledge-CPA.com, simple. And then Ashley at Rutledge-CPA.com.
Okay.
And then my direct phone number is 919-907-9218.
Good job, because the last person we had gave their cell number. Because they're so used to giving that out. It's like, oh, I'm sorry. I did have one more question.
Sure.
And we had talked briefly about it. Your world's like mine. Generally, when somebody asks me a question, it depends on the facts specifically. But I do have some folks who maybe were the stay-at-home spouse and didn't just signed off on the taxes, and maybe someone's self-employed or didn't file their quarterly taxes, and they got filed, and now the IRS is coming after them. Is there any relief if you're the spouse and you didn't know what was going on?
Mm-hmm. There's a form, a lovely form, that's called the innocent spouse.
Right. And
that's something that we would certainly want to sit down and look at all the details to make sure that's the right form for you. But that's the best route.
Okay.
And it's a reasonable test. If we can prove that you reasonably had no idea, then that's usually good enough, and that's what that form is for.
All right, because I do have some folks ask me about that sometime. Ashley, thank you so much for coming and sitting with us today, and thanks everyone for joining us. I hope it's been helpful. If you have other questions, contact Ashley. You can contact us. Go on our website, newdirectionfamilylaw.com. We're happy to answer any questions. Give us a call, and we'll sit down and talk to you and hopefully help you work through this process as easily as possible. Thanks, guys. See you later.
Thank you.